What's up, everybody, and welcome back to another episode of Loop It In, the DoorLoop podcast, where we pick the brains of experts in property management, real estate, and investing. Tech, we cover it. Marketing, that too. So whether you want actionable tips or the insider scoop from top performers in their industries, this is one show you won't want to miss. Be sure to subscribe so you won't miss out on any future episode.
Hello, David. Hello to everyone else and the Loopers community. And first of all, thanks for having me. I'm super happy and excited to be here in the Miami office. Probably the last time before we're moving. So my next visit is going to be the new office. Very much looking forward. Excited. Indeed. Going back to your question, I grew up in Israel until 2007. After 6 years of serving in the Navy. And then basically I moved to the UK and started my personal business career life. Did my undergraduate at the University of Birmingham in England. Studied business management. At the moment, I'm happily married with 3 kids and enjoying
girls?
Enjoying life in London. I have 2 lovely girls and a baby boy.
Okay, amazing. And I know that you had a very serious experience in the army. So tell us, what were you doing in the army? How long were you there for? It was the Israeli army, correct?
Yes. Well, I served in the Navy, and basically the training took 3 years. So you had to sign for additional 3 years of service. I was a Navy officer, ship commander. I had my own ship at the age of 21, which is now, thinking about it, it's insane to have that responsibility at the age of 21. As a crew man, a team of 10 warriors with you. But it was definitely a very, I would say, almost life-changing experience because it changed you from being a boy to a man.
Yep.
It gave me a lot of good traits and made me the man I am today, probably. So, it was overall very positive experience.
So what would you say was the number one thing you learned from the military service that you took into the work life, into your career?
Probably, I would say it's about self-belief. So, in the military generally, in the program, in the selection process we started like after thousands come in and then you start a very expensive, lucrative course, 70 people, and you know that on the end, after 2 years, it's only going to be 30, maybe 35. So if you're lucky, and so the fact that you can, every time you have a challenge, every day you have a new challenge, every week you have a new challenge, every time they push you further and further. And once you start to believe in that you can do that.
So confidence. Okay. So tell us about your business today. What do you do?
Okay, so DBM Advisory is a specialist UK commercial real estate investment and asset management firm. We are based in London. We offer bespoke service. Think of it as a wealth management service for only commercial UK real estate investment.
Okay. And how did you get started in this industry? Did you just one day decide I want to open up my own property management company, or did you work for someone before?
I was fortunate, to be honest. So I started as an employee.
Okay.
My journey starts. So I mentioned I moved to London, to England in 2007, graduated 2010. I was working in a tech company, research and development, in the traffic enforcement field. So that business back then was doing red light and speed cameras.
Yep.
Not very fancy industry. It wasn't for me. I realized that, but I had a very good click with the shareholders of that company. There was already a trust built in that relationship, and they basically offered me the opportunity. Said, "Look, it's good time. It's after the big financial crisis, and they said, why won't you explore this commercial market, real estate market, and make some investments for us?" Okay. So I started as an employee. for one client.
Okay.
And then we did. I basically bought a few books on Amazon,
Okay.
like Property for Dummies, Property and Money.
Yeah.
You just read and you just consume as much of knowledge as you can from others. Still have a very good friend in the industry. His name is David as well. And he worked at Cushman and Wakefield. It's like one of the top 4 companies.
We've heard of it.
Yeah, he was an intern then, and he basically took my hand and guided me, and whatever he learned, I learned from him. And actually, we did our first deal together. So he was the agent. And it was in early 2012 when he presented an opportunity which was good for my client. And this is when we started. Since then, it was almost unstoppable.
And then you branched off on your own to start your own company, or you were partners with him for a while?
No, so I was an employee until 2015, I would say.
Okay.
We grew the portfolio back then to over £50 million. And I think, at that time, it felt like I'm too big to sit on the company's books.
This is commercial properties?
Only commercial. So we do UK-wide and very generalist investments. So it could be offices, it could be leisure, it could be retail, it could be industrial and logistics. You name it, and I look at it as long as I can see some sort of an angle of value.
So then you started your own property management business, and then you started trying to attract owners and investors to manage their commercial properties for them. Is that right?
Yeah, so it took a while because I set up my own business, DBM Advisor, in late 15. I think January 16 was the first month of trading. But nothing really changed because I still had the same client, the same properties to manage. I was just self-employed, some tax benefits, but nothing clicked in my head. It's only after probably maybe 2.5 years that I became hungrier and I wanted to achieve more.
Yep.
And then I said, okay, well, I have no exclusivity with this client. I'm offering amazing service. He is happy, I'm happy, but I can do the same for others. And I started to look at that field, but I realized it's not easy to get new clients.
Yeah.
Especially at that caliber. I mean, my minimum requirement of investment is £10 million. Now, go find it.
Yep.
And build that relationship and trust.
Yep.
Happily, I can say now that I have a few clients, but it took a while until.
So let me ask you the golden question: how'd you get that first client?
So I mentioned, I was fortunate enough to have my first client as my employer.
Wow.
So I was an employee for that client, and then we shifted. I said, I'm gonna set up my own business. Would you be my first client, my anchor client? And he said, yes. Well, nothing changed in the conditions, So he paid the same, nothing really changed.
Okay. Just paying your company, LLC, versus you directly now. Okay. So that was easy. You already had one client under the...
Yes. That's I was fortunate enough to have that.
Okay. So how about a real client?
A real client. I think this is where you actually have to use all your senses and basically all your contacts and relationship, which is accountants, solicitors, tax advisors, surveyors, agents, brokers, and basically look for that new business, recommend you. In some cases, you need to offer them referral scheme or some introduction fees. The good guys that actually recommended me, you get to know a lot of new people, and some of them you develop some sort of a click relationship that you take it to the next level. And then after one coffee, after Zoom, you have a coffee, and then you have lunch, and then you have some phone calls that present some opportunities. My second client, it took me over 6-7 months after developing that trust that he actually
But it's
gave
all
me money
word of mouth. It's all relationships, connections, networking. There's no marketing, advertising, Google ads. It's all just networking and relationships.
Yeah. How much can I advertise on Google for finding clients over 10 million pounds?
I'll let you know. Let me check. Okay. Got it. So for people tuning in that have not started their own property management business, would you recommend doing the same path as you, just consuming information, books, YouTube videos, and working for someone else first?
I think it depends on your personality, but you can do either way. So yes, you can go and actually work for one of the big firms, learn a lot, and gain that knowledge. And then if you have that entrepreneurship bug in you, you're going to leave at some point because you're not going to be happy in a big corporate world and you're just going to set up your own business. But at least you have the fundamentals and the know-how.
Right.
Some guys, can do it straight away, especially if you have some good contracts. There's no right or wrong. There's like right or wrong for you, whatever.
Right. Now, when you said earlier that your minimum was 10 million pounds, what does that mean exactly? What is the 10 million pounds?
It means that I have a lot of guys now approaching me. Hey, I saw what you're doing. I heard what you're doing. I like that deal. Wow. Can I join in? And I said, yeah, of course. But how much? Well, I have $1 million or I have £1 million.
So let me pause you there. So you are putting together the deal and you're buying a property and they're investing in it, or they already own it and you're just managing it for them?
All right, so let me
big picture. Yeah.
Big picture. Think about it like a wealth management. Let's say you sold a company and you made $100 million. Okay.
Yep.
You say, I want to put that 50% in the money market, stock market, and I want to put like 25-30% in either residential or commercial property.
Yep.
Okay, I want to get income-producing assets over the long term. I want to leverage them, get some bank finance.
Yep.
Now, you can do it by yourself, or you can just find someone that, he does it, like property, private equities.
Or syndication of funds.
Syndication clubs, whatever you name it.
Yep.
Or you can, and I'm one of these other options. You can just approach me because you heard about me from a friend that does the same.
Okay.
And I will tell you, look, I can take you. Let's meet. Let's understand what's your risk appetite. What do you want to invest? And I will take you only if you have £10 million available cash to invest.
Got it. So the properties that you're acquiring are generally 40 million pounds?
No, I'm probably going to do like my sweet spot is anywhere between 2 million to 15 million. Don't forget that if you offer a minimum of £10 million, you know, that on 50%, that's like £20 million of cash that you can invest.
Okay. So 10 million minimum isn't just for one deal, it's for a few deals.
It's
portfolio of deals.
I would always prefer to diversify it in a few deals.
Okay.
If you look at different locations, different industries.
Okay. And how many investors are you putting together per deal?
My preference would be always to work with one investor on one deal. And this year, 2022, I've done 2 deals that actually were JV between 2 of my clients, so 50-50.
What does JV mean for people tuning in?
Yes, so it's a joint venture. So you take 2 investors. Exactly.
Okay.
There's a partnership. I'm going to be they're going to be the LPs. I'm going to be the GP. I'm going to manage it, the asset manager. And my role in it is actually source the deal because I know what they're looking for, like a wealth manager that can build your portfolio. So I'm trying to create this S&P 500 in UK assets.
Got it. Are you also borrowing money from the bank?
Of course.
What LTV, loan to value ratio?
The highest we ever done was 60%.
Okay.
I think our sweet spot is probably 50%. At the moment, I manage about £100 million of assets, which is leverage, I would say, at 50% LTV.
Got it. And what returns are you? I know there's no guarantee, but what returns are the investors looking for generally? Cash on cash, IRR.
Yeah, so the world is changing right now as we speak.
Right.
I would say probably before 6 months ago, my guys would look at 6-7% cash on cash, return on equity, annual basis, but with an exit point of that low double digits. So anywhere above 12%.
Okay.
Luckily, all the exit we've done so far, so the lowest was about 14%, the highest was about 36%.
Nice.
Yeah, that was a lot more asset management intensive, add value with some planning processes or rezoning.
Do you have any minimum hold periods? Like, are you planning on exiting within 3 years, 5 years? Is there a maximum hold period? Or is it just market conditions?
So on one end, I'm lucky enough that I don't have that pressure. as a fund, because as a fund, usually you have like 5 years plus one, and you have this pressure to buy, to sell, and sometimes you don't control the market conditions. So I'm lucky enough to don't have, I don't have that pressure for my clients, because they say, look, it's for my grandkids. I don't really care as long as I get income, everything is solid, property value can go up, fluctuate, go down, I'm fine. On the other end, as DBM advisor, my business model is, apart from management fees, is also upside on the success. So sometimes it means that, they can buy an asset and they're not going to sell for a long period of time, which I'm not going to see any upside. You can claim that on the other end, you still get management, which is fine. But
so that was my next question. You still make money no matter what. So what's the typical rate here? It's like it's a property management fee. You are doing all the property management yourself, first of all, or are you outsourcing it?
No, so I'm doing everything in-house, from sending invoices to VAT to tax guys to accounts. Well, I'm an asset manager. I'm not a property manager. We have a few assets which are multi-tenanted, and then we take like a local property manager, but this doesn't come out of the pocket from the clients, because you have service charge from the tenants that occupy the building. To maintain the building, property manager get paid from that service charge.
Got it. So how do you make money on the deal?
How do I make money on the deal?
This is confidential information. No, well, obviously you have a prospectus when you look for investors, and they know exactly how much you're making, what percent you're taking. I'm assuming it could be something like a pref, 8%, anything over 8%, you take 20% of after you sell the deals, anything like that.
There are so many different models and options. I mean, my model is quite basic. I don't actually take any preferred. I don't offer preferred. It's a fixed fee on acquisition. Usually it's anywhere between not 75 to 1.5% of the acquisition, of the asset acquisition value. And that's only if the deal is successful.
So that means that if you raise $1 million, you take, let's just say 1%, you make $10,000 day one as soon as the deal goes through.
No. Doesn't mean like that. It means that, let's say I have a client who came in with 10 million pounds, and then on the next day we found a deal which was actually 10 million pounds. Let's put bank aside at the moment. If we are successful in the due diligence, in the bidding process, and we actually complete the deal, I'm going to get 1% of this value, which is 100 grand from 10 million.
Got it. Right away, day one.
Only if we complete the deal.
Yeah, of course.
And at that point of time, my clients start to get dividends. Distributions. On a quarterly basis. Then I have...
That's it?
So I have management fees, actually. Exactly. That's quarterly. So every time we charge the tenant and money comes in, you take a percentage. I would say the market standard is anywhere between 3 to 5%. This is usually what I charge, market standard. And the difference where I actually differentiate myself from others is the upside. So a lot of commercial property do it as a private equity model, which is like 20-80, preferred 6, 7, 8%. And then if you have a ratchet, and then you have like 70-30, up to 50-50. It really depends on the model. I'm fairly straightforward. So once you sell it, once you get all your money back, usually you just split it 90-20, and if we go above
90-20?
Sorry, 90-10.
Okay.
And if you go above some sort of level, which is abnormal.
You do this?
What do you mean?
This is what you do, your model? If the deal is
This is my model, this is the better.
Okay, so let's just dumb it down for people listening. So the deal, they put in 10 million, they get back 12 million. They make 20% of their money. Let's just say in 1 year, it's a home run, really quick flip.
Okay, so that's easy. So let's say you put 10 million, that was the acquisition price, but you have actually stamp duty, land tax, you have solicitor fees, you have other surveyors fees. So let's say everything all in was 10.5 million, okay, with acquisition costs. And you sell it at 12 million, but then you have selling cost, agent, let's say
so you make $1 million profit.
$1 million profits. I'm going to take 10% out of that, which is only 100K. However, let's say
only 100K.
In compared to private equities, which usually going to take 20% or more.
That's a good business for those listening. If they want to get into this, there's serious money, but you need serious investors also. That's probably the hardest part.
Yeah.
And finding the right deals and doing the right diligence and being trustworthy. It's not easy to get started, it sounds like.
I think it's it's an old industry. It's very difficult to differentiate yourself in this part from actually being, a good person and develop this relationship.
Right.
So why would they choose me and not someone else? Right. It's all about who you are. Do they have this? Do you have the integrity? Right. Can they actually know that even if the deal is good or bad, you're gonna stick to them and make sure we're gonna ride this wave?
How important is skin of the game here? Are you always investing your own money in every deal?
I think it's important. Until now, I haven't invested in every deal, and it's mainly because a lot of my clients are in a different level that they do more wealth preservation or core deals, and I'm younger and I want to work my money harder, so I'm looking for
value
add stuff. But every deal we add value add stuff, I joined in with my own money, and deals that felt like very boring, they were fine with me not joining and just managing it.
So explain to everyone what core versus value add means. People that want wealth preservation, they're happy with 6 to 8% a year, if even, and people like you that want more wealth generation are looking for 8 to 16% a year, and that's more value add. So explain that, core and value add. There's actually a few more, I believe.
Well, yeah, you can say that there's a spectrum of risk reward profile for deals. So you can have wealth preservation, which means you buy an asset on, Fifth Avenue in New York.
Steady.
It's steady. It doesn't really matter if you have a tenant now or not. It's going to preserve its value over the long term because it's like a very unique location. It's a very unique building, whatever reason it is.
You don't need to flip, renovate it, or do anything crazy to it. It's stable.
Exactly.
Maybe there's a 30-year tenant in there already. Maybe the government's paying you. It's very, very stable.
Solid income or solid location that's going to maintain its capital values in that location. And that's wealth preservation. It means that you need to maybe be like beat inflation, okay?
Okay.
Which used to be 2%, not anymore.
On the last 2 years.
Exactly. Now, after that, you can say you have core and core plus, and then you basically increase a little bit your risk, but you increase your reward. So you're expecting 6 to 8%. On a core, and then core plus anywhere between 8-9%, and then add value. It's already started to be double digit, and then we have opportunistic, which is completely, on the other end of the spectrum. You buy a vacant building, you need refurbishment, you need to find a tenant for it, you need to sell it on the market. It's timing, it's planning, or add value, add mass. But then you expect, all that hard work, you expect to actually get 25-30% IRR.
Right. What happens when a deal goes south? Something happens. It could be in your control, out of your control. The market tanks, something happens. Maybe foreclosure happens. Do you completely lose that investor? How do you still keep their trust?
Difficult question.
Has that happened to you?
Luckily, not yet. I think we're in the process now of some, the portfolio I managed definitely came down in value. I think I protected my clients with some taking fixed loans for long terms. A majority of our back finance is already fixed.
So you're helping them refinance during these?
Luckily, we don't need to refinance now. Only I think the next refinance is in 5 years' time. So hopefully by then things will settle down.
Okay.
It's a lot about preparation in advance. I'm lucky enough to, I don't have a deal that we actually lost money. At the moment, what I told my clients is to set some money aside just in case 100% valuation went down, and probably when the bank's going to call for valuations. If we have any breaches in the LTV covenant or whatever, we have the money aside, we're not going to give the keys.
Right.
But I doubt it. With 50% LTVs, let's see. Let's have a podcast number 2 in 12 months.
Yeah.
But so far, so good. Touch wood.
And then that's why you go with lower LTV, so you protect yourself. You have a little bit of cushion room, basically. What happened to me during COVID was I had a few deals, very similar deals, syndications funds, and 2 of them didn't have enough money in their reserves. So they started doing capital calls. Have you ever, explain to everyone what that means and why they would do capital calls and how it affects the deal if you can't make a capital call?
I'm curious to hear from you because I've never done anything like that. I understand what it is. The deals I do, this is why I make sure my clients have the money in advance. Everything, sits there. I'm not going to call for capital. I think, were there like development deals?
No, they were just, one was an apartment complex. Tenants couldn't pay rent. They were getting rent abatement. We couldn't evict them. I think it was in New York. So New York was very protective of the tenants. But for the landlords and for the investors, we were getting no income, no distribution. They had no money for other projects they were doing, renovations, whatever it was. So they ran out of money. They ran out of reserves. So what they had to do was start calling capital from existing investors that already invested 3 years ago. And like, hey, instead of us paying you now, you need to pay us. We need to raise an extra 300 grand. Your part is 10,000 more. Yeah. And if you do not contribute within 7 days, whatever the time is, according to the legal agreement, they will be able to get the money from someone else and give them 30% interest, something ridiculous, or even dilute you and your shares in the portfolio. So that was a tough call, because if the deal was going south and you didn't want to put bad money or good money after a bad deal, you just will suck it up and lose some shares.
Yeah, look, it happens even in real estate. Yeah, this is why when you actually do the due diligence, the initial one, you have to look at the basic, the fundamentals, and it goes to location, covenant strength, what's the alternative use value, what can you do with it if everything goes south. When I started, the first rule, my client, I was an employee then, so my boss told me, first rule, you probably read the Warren Buffett book, he said, you do not lose money. You go into a deal and you understand how you don't lose money.
And rule number 2, remember rule number 1.
Exactly. And then you actually build it up how you can actually make money like the market, and then how you can outperform the market with some add value.
Got it.
So this was my methodology from day one. Something similar happened to me, to one of my clients' portfolio during COVID. We have a cinema, Odeon Cinema, which is owned by AMC Global. And obviously, as you know, in COVID, cinema were shut down. Cinemas were completely, the business model is so bad. So
wow.
Once it's shut, they don't have any alternative income. They cannot sell popcorn or Coke.
Well, I think they were renting out the theaters for private parties only. That's what they were doing in Miami.
You're not allowed to have private parties during COVID.
Wow.
You don't have commercial. You cannot sell popcorn. You don't have you don't have productions coming in. You basically have zero income with lots of commitments. So one of my clients is an Odeon Cinema, and they approached me and said, "Look, then we cannot pay rent. Look, and you're not the only one. We have like thousands of cinemas all over." And I said, "All right, can you pay me something?" They said, "No." And I looked at the list. I spoke. There was a lot of government, support for this kind of businesses.
Same in the US. Yeah.
Luckily, I approached the bank. We had the loan, and the bank said, "Okay, that's fine. We can delay your interest payments as well for the next 6-9 months."
Right.
So now we stand that Odeon paid us all the debts they owe, and they're operational. And the bank is, the bank worked with us. Things happen. You just need to be prepared, and you always need to have cash aside, lots of cash.
Yeah. COVID was a wild ride. I mean, here, at least in America, the government was handing out so much money to help everyone, because people don't realize that as a tenant, if you're not paying, your landlord can't pay their mortgage and the bank doesn't get their, investment back. It's a whole cycle.
Yeah.
Everyone needs to kind of compromise here. But with AMC, I'm curious, and other tenants like that, were you setting up, I don't know if the word is rent abatement, where they would eventually pay you back?
Yes.
Okay.
So it's called the deferred rent. We just basically deferred it to next year. We spread the payments, and we worked with them because we wanted them to succeed.
Okay. So just to kind of switch gears a second here, for people listening that already have their own syndications and funds, and they're already doing what you're doing, how do you take it a step further and grow? I'm sure in one part of your business, you said, okay, I want to take it to the next level. What does that mean for you, and how do you do that?
I think I'm still in the process. I'm actually still doing it. It's always about, sit down with yourself, reflect where your business is, where you want to go, understand on the map where you are, and how do you want to, where you want to go and how do you get there, because you have a few options and not every option offer relevant to everyone is different. So what might suit you might not suit me.
Right.
And I think at the moment where I stand, I actually have a debate of should I go into the syndicate and clubbing and approach a lot of these new clients. should I lower my threshold to below 10 million pounds or not? We'll see. I don't know.
Okay. Now, do you ever mix business with family and friends? Do you ever invite them if they have enough money to join in or participate, or is that a big rule and no, never invite family or friends?
No, I don't have any rules. Actually, we've done it. One of the other DoorLoop co-founders,
Okay.
who tagged along on a deal which was very lucrative. You remember I mentioned the 36%. That was the value. I got in, and your friend, just decided. I told him, I'm going in. You want to join? He said, yeah, I'll match you whatever you put in.
Wow.
Yeah.
Okay. That was lucky. I mean, that's great when the deal goes well, but if that deal lost them money.
Well, at least he knows that whatever he lost, I lost the same.
Right. Okay.
So I told him, this is what I put. If you want, you can put more.
Okay.
There's like a lot of psychology in it. So if I lose something, it's painful for me as it's painful for you. I mean it the same as,
Okay. Let's see. So is there anything, I mean, do you recommend this business to someone doing what you do? It seems like to me, it seems like a lot of stress managing 100 million pounds of other people's money. Does that keep you up at night?
I sleep quite well, I think. I'm being honest, yeah. I think it's the systems I've put in place. I think it's the knowing and the confidence that what I buy from day one, how south could it go? How wrong could it go? Even we had COVID, which was a black swan event, and we survived and we got the money back. I mean, you have to be very confident in the things you buy. If you buy high risk and you cannot tolerate the damage that can come with it, if it goes south, just don't buy it.
Right.
I know what my clients want. I know what they want, what kind of returns and what assets I can buy for them. So I sleep well at night.
Now, you mentioned black swan. Not everyone might know what that means. So explain, what is a black swan event?
What's the definition of a black swan? It's probably something that, you put on your Excel sheet. So you have probability and likelihood of events, you do risk analysis, but you can only go so far. A black swan is something on the Excel that you wouldn't be able to find, no matter how far you're going to go, on the right, on the left, on the top, because it's something you cannot predict.
It's the unknown that we can never, ever think will happen, like COVID.
Yeah.
Okay. Yeah, black swans are always scary because they can destroy your business overnight and you'll never see it coming.
Or it could be the greatest opportunity.
Yeah. For some businesses during COVID, they exploded.
Yeah.
So what is the most important part, you would say, when dealing with your clients who are these investors? And who are these typical investors? First of all, before you even get into that, are they institutions, funds, just super high net worth individuals?
Yeah, so I deal with you call it ultra high net worth individuals. So everyone above, I think, 10 million in net worth. Probably not net worth, so I think it's 30 million net worth, the definition, but don't...
Whatever. And it's different for everyone.
It's private clients.
Okay.
I don't deal with the institution money.
Okay.
I think they have a lot tighter regulation. I'm not sure even if I qualify to deal with them.
Okay. So it's like family offices, also trust.
Family offices, private, trust. Yeah, I don't deal with charities. Never had a chance. I've actually dealt with a public listed company in Israel that they were acquiring an asset, and I gave them a consultancy and I brokeraged the deal. They didn't want me to manage because they have their own in-house management team, but I've done it last year.
So what's the number one most important part dealing with these investors and clients?
Number one, I think I mentioned that it's all about integrity and trust. When you earn money and you put it to a wealth manager, bank, whatever, even if you forget about investing, your own bank, you want to make sure that you trust them.
I'll tell you, for me as the investor, because I've joined a few of these deals, for me, the number one thing was, obviously I wouldn't have gotten in the deal if there wasn't trust. I also probably wouldn't have gotten in the deal if there wasn't skin in the game, if the operator like you didn't have some money in. I always loved deals where they had money in. I always loved deals where their family and friends had money in. And I saw the investor list. I said, okay, I know half these people, and I know that a few of them are your family and friends. So that for me was a big one. And then after the deal went through, the number one biggest thing for me was communication. You would be shocked how many of these funds don't communicate. For a year, Zero. They'll give you distributions. They won't send quarterly reports. They won't tell you what's happening. And then you'll find out in the news that the building is getting foreclosed or whatever the story is. And you're like, hey, what's up with this? And then still no communication. So to me, that was my number one thing. And then you have the pros who over communicate. They send me 30-page agreements and no one's reading, but okay, it's nice. If I ever want to, one day I can read it. So to me, it was communication.
I think I learned something from you. I need to improve my communication skills, probably with my new clients, because I'm already used to a lot of my old clients, and it's all on WhatsApp already, and we communicate on the same level subconsciously. He knows what I'm going to do.
Right.
But having new clients, I think it's good that you mentioned that.
I'll tell you one more thing that I liked a lot. Not every investment has it. It's like an investor portal. I know Juniper Square is a big one in the industry. For you too, in England?
Less.
Okay.
Less.
The US very big.
And it's really good for club and syndicated investments.
Yes.
Fund style.
Yes.
When you deal with one client or two, you don't really need it.
Right.
But what you mentioned initially, it's so and it's so difficult to create this pure alignment of interest. You study that in every business school about the principal agent issue, to create, eventually, I'm looking at my own pocket. Everyone looks at their own pocket. How do you create this alignment?
Balance.
You're not too greedy. You want them to succeed. I think the switch for me is that realizing, look, this is my life. This is my business. This is how I support my family. I need to make sure I don't lose them money. I need to earn them enough money. They go, I will go. It's always been the mantra, the more I can make for you, I'm going to go with you.
Right.
So,
right. Okay. Interesting. And so walk me through a typical process, start to finish, from finding a new deal to closing on it. Who's doing that analysis and research first?
Myself. Okay. I'm very lean. I have an executive assistant, and I have service providers that I use for, building surveyors, mechanical engineer stuff.
So, I mean, that's exciting for people listening. You don't need a giant team, but what you do need is the knowledge and experience yourself.
100%. I think I'm at the verge probably that, if I'm going to go from 100 to 200, I'm going to need another analyst to assist me with some deal acquisition and transactions. But at this stage, it's still all fine. How does it go? I mean, first phase is to know what your client wants. Once you know what your clients now, you communicate with all of your agents to source you the deals. You get a few options.
Okay, so let me pause you there for a second, because the deals that I'm part of, they don't ask me, what do you want? They already know they're going to find a deal. They're going to put together 20 investors, and they're going to say, David, you want in or not? I need 24 hours. They always put their urgency for some reason, but you're very different because you're dealing with one big whale
Exactly.
investor.
This is how I differentiate myself from all these club investments that, you can come in at 250K minimum or whatever.
Right.
Join us or not, someone else will join. We're going to do this deal.
Okay.
I'm not. Again, I'm like a wealth manager for commercial property investment. If you made a lot of money and you said you want to allocate that to commercial property for income producing, we have a chat, we build that strategy. How long, what's the risk profile? Once we realize that, then we can see some deals together. It's a lot about educating, maybe me educating the other person. It's different. It's not, it's...
So you ask them what they're looking for, what's the risk appetite and profile, how much they want to make, they want to preserve wealth, increase wealth, and then you go out, you do your research, you find the deal, you analyze it, you have your spreadsheets, I'm sure.
Of course, cash flows, projections, you present, you show them different deals to see, also to check if they're actually what they say it's true.
Okay.
Because you can say, I'm up for risk, I want to get 20% of my money, and then you send a deal, and they ask you, but what happens if the tenant leaves? Well, basically, it's a binary, it's a one on nil. You're going to lose a lot of money. So maybe we'll go to something, different direction.
Yeah.
And you do that. This is all about the relationship. And once I ask the agents, source me some options, they give me opportunities, I analyze them. By now, after 15 years in this industry, you know a deal if it feels right. You feel it in your bones.
Yeah.
The market rent is correct. It's not overrented. It's not underrented. The location is good. This is the bad. This is the pause. You analyze the macro, the micro. the tenant, the credit risk. Is it actually financeable? You go to a bank, you ask a bank, would you loan me how much? Okay, so I'm going to get a bank loan. I know it's passing that. And then you put it in the numbers in the Excel, you do a SWOT analysis, you send an email, let's have a chat.
Do you recommend using, I don't know if the word is a broker to find a loan? Where they just contact 50 different banks in their network, or do you have your own connection?
If you are a beginner, 100%.
Okay.
Now I'm at the stage that I already have direct relationship with banks.
Right.
But for some deals, I know that my banks wouldn't be able to provide. And I've done it on a big facility, over £50 million of loan.
Right.
And I used the broker, and the broker actually gave me very good terms.
Got it. Now, for these clients, why would they choose to invest money in a fund like this versus just throwing it into a REIT, publicly traded like VNQ, Vanguard's REIT? Is it just more diversification?
Well, it's a philosophy. Look, some people like
more upside.
Real estate, it's real assets. Some people like holding it directly under their own name, under their own LLC,
right.
Making sure
more control.
Okay. You cannot. I don't have all the statistics, but buying a REIT is also really good. But when the market goes down, REIT is being affected as well.
Yep.
The benefit is liquids, know, but it's more fluctuate. It's in compare that if you hold directly, no matter what happens, you're still going to get your quarterly payments or your monthly rental rent until you have a tenant there.
Right. Now, talking about control, and then we're going to wrap it up. So how much control do they have? Because technically, they own it. It's under their name. You're just managing it for them, or you're in control? What do the legal docs say exactly?
I'm fairly easy, to be honest. So I started 100% under their name.
Okay.
So
their name.
Their name.
Oh, okay.
It's usually we do it with an SPV, special purchase vehicle, which is a company. They own it. They are the 100% director, 100% shareholder.
Okay.
Sometimes they have 100% control over the bank. Some cases I have control. I have access to the bank as well to do payments up to these amounts that we agree in advance. So they're gonna have less communication. But I'm fairly easy, whatever they feel comfortable. Right. Okay. It's all about this trust.
Yeah, of course. Okay, cool. All right, Dean, thank you. That was awesome.
And you say you learned
I'm learning a lot. Yeah. Is there anything I'm forgetting to ask? Anything else you want to share? Or important to people just getting started, or have a successful business and want anything else?
Well, he says always, repetition is the mother of all skills. So you have to repeat whatever you do until you created a habit, and you need that momentum with you.
Yeah.
And good habits to create in your life, it takes time. So take it easy on yourself. I'm used to, set up a target, let's do it. And if not, I'm unhappy. And take it easy, take a breath. It's a life journey. It's not about the targets.
Right. I love it. So how can people get in contact with you or follow you online or anything like that?
I don't have any website presence, to be honest.
Okay.
It's on my to-do list. I'm not sure. I'm not sure that I want it, but
message your LinkedIn.
Yeah, if someone needs me, they can find me.
Is that Liam Neeson? I will find you.
It's funny, the story from Tony Robbins. So I was at this event. So I'm gonna take one more.
Go ahead.
I was there and I was chatting with this Israeli guy I met accidentally. We're sitting together and we started to chat. Where are you from? What do you do? Real estate, property. Very nice guy, very good vibes, good energy. 15, 20 minutes and then we say goodbye. I Googled that night his name and oh my God, he's the chairman of a public listed Israeli property company worth over 5 billion shekels. He's holding 50% of it. And he's like, this guy is a billionaire. And I didn't even know that. I'm not, but he's so nice and cool. And I'm going to have to reach out to him just to have a chat, just to keep proximity is power, just to learn from him, see what I can offer him, maybe. And if not, just let's connect somehow. And in Israel, within a few texts or phone calls, you could go to the president or the prime minister. And I managed to get his call, and I texted him, and he emailed me, and he even sent me an emoji. I said, let me know for coffee, lunch, whatever. When I come to London or when I come to Israel, I said, of course.
Cool.
Things happen.
Yeah, cool.
You can contact me if you really want to. I'm sure you'll find a way.
We're always 3 degrees of separation for everyone. All right. Thank you again, Dean. I appreciate it. And more to come in the future with future podcasts. Thank you again for your time.
Thanks.
Thanks for listening all the way to the end. Don't forget to give us a good rating on whatever platform you're tuning in from, and we'll be back soon with another new episode. We hope to see you there, and until next time, this has been Loop It In.